Hey, so you're thinking about moving to South Florida and the surrounding area. One of the questions that we always get asked is about taxes. Right now, standing right in front of the Ann Gannon Tax Building here in Palm Beach Gardens. And today, I'm going to tell you all about how taxes are assessed and how Homestead works. Stick around. That's right. One of the biggest questions that we're always asked is taxes. A lot of times what people do is they start looking for homes and they look at a tax bill and they say, oh, okay, my taxes are going to be $10,000, $5,000, $20,000, $30,000, but they're never taking tax assessment and homestead into consideration. So I really want to dive into that so everyone has an understanding of what that looks like. Listen, my name's Andy Johnson with the Andy Johnson Group over at EXP Realty. And if this is your first time joining us on the channel, go ahead and make sure you click subscribe and ring that bell so you can be notified anytime we post new and wonderful content about living in South Florida. So let's dive right into it. You know, taxes are not the most exciting subject in the world to talk about, but obviously something that's necessary to know about when you're moving to this area. So our assessment date here is going to be January 1st of every year, and this is why it's important to you. As I was mentioning before, when you're looking with a real estate agent or when you're looking on Zillow or wherever you're looking at your new homes, you're going to see a tax bill on there. And, you know, let's just say on $1 million house, it is reflected as $10,000. And what's going on there is that owner may be homesteaded and they've had that home for a while and it has not been reassessed, which we're going to talk about in a little bit. And you think, oh man, I buy this $1 million house and I'm going to have a $10,000 tax bill. And that's not how it is. You are going to be reassessed for those taxes on January 1st of the next year. So you'll get to take advantage of that for the first year, but then it's going to change. Around October and November is when we're going to get our tax bill to come out. And if you pay it early, of course, you know, you are going to get a discount. If you pay it later, of course, then, you know, you're going to pay a little bit more. And something of note is to know that our taxes are paid in arrear here. So 2025, you're going to pay for your 2024 tax bill, if you will, or at the end of 2024, you're going to be paying that 2024 tax year. A lot of people get confused on that. So our taxes are done with the millage rate. The millage rate is $1 per thousand that you spend. The millage rate here is typically going to vary from about 17 mils to about 23 mils, depending on where you're going to live. So let's say you bought a $200,000 property. That means if you were in an area where there were 20 mils, you're going to pay about $4,000 in taxes per year as a breakdown to kind of give you an understanding on what that looks like. So the next thing that we definitely want to talk about, a lot of people come from places that do not have a homestead tax exemption. So the homestead tax exemption and why it's important to you is of course the money that you can save. And how does that work? So the maximum that you can get is going to be a $50,000 tax exemption. It's broken up into two parts, two $25,000 exemption types of exemptions, but really as long as your home is worth more than $75,000, which pretty much every home in Florida is for the most part, you can go for all $50,000. And what that looks like is, let's say you have a home worth $500,000 or is assessed at $500,000. Your tax bill will then, rather than being assessed at $500,000, is going to be assessed at $450,000. What does that mean to you? Well, every year it means you're going to save about $700 to $1,200 on your taxes, depending on what your millage rate looks like. The other massive benefit to homestead, and really the reason to do it, if the savings isn't enough, it should be, but if it's not, is that it reduces the amount that your home can appreciate from an assessed value standpoint per year. All right, so I'm gonna say that again. If your home was worth $500,000, $500,000 this year, what Homestead does is it maximizes the appreciation amount by 3%, meaning next year when they go to assess your home, the most that the value can go up is going to be $15,000, which would be 3% of $500,000. If you're an investor, that can go up 10%. Or if you don't, let me say that, if you don't have Homestead, the value can go up 10%. So if you're an investor, if it's a second home, anything like that, it can jump that much. So your assessed value can go from 500 to up to 550 with that jump. And when that happens year after year after year, you can see the significant amount that starts to pile up with people paying taxes. That's why from our early example too, what we were talking about, when somebody may own $1 million home, in a place where they're paying a 20 millage rate, so again, that'd be $20,000 per year, but they're only paying $10,000. Well, that's because they have Homestead, and the appreciation of their home hasn't been realized due to the assessed value only being able to go up 3% per year. That's important, folks. It adds up. There's also a lot of things that come with Homestead too from an ownership right standpoint. And if you're married, totally different subject. But if you have questions, call me or send us a message below and we'll talk about that too. So what does it take to qualify for Homestead? All right, so that's right. The requirements for Homestead are the home must be your primary property, which typically means you need to live there more than 6 months a year, and you have to be able to prove it. You have to have your driver's license down here. You need to be a permanent resident of the United States as well. So those are the main things that you're going to need to qualify. Oh, and you have to own the property before January 1 of that year. So if you buy a property on January 2nd, you can't apply for Homestead until the next year. So that's something else. There are other discounts that you can stack on top of Homestead or to increase your Homestead as well. Senior citizens, vets, and there's some other categories too that actually lend to a larger Homestead exemption. So those are something definitely to look into. There are lots of ways to apply for Homestead, but the easiest is to just search Florida Homestead online and it's going to come up and you're going to be able to find it. We will put the links below too so you can track those down and check them out and see what that's all about. So another question that we get asked a lot of the time is if you move, if you're already a resident in Florida, and you filed for Homestead, do you get to keep that benefit? And the answer is yes. There's something called portability. There's even actually a portability calculator that allows you to look and see what you would save when you go to move. That portability calculator and the portability exemption does not apply for everything. There are limitations on the amount. I believe it's $500,000. But listen, if you're thinking about doing it, reach out to me. I'll show you how to get to that portability calculator, which we'll put a link below for as well, and you can run those numbers too. Something else that I think is definitely worth mentioning is often I'm asked how are taxes calculated, what are taxes going to be on $1 million house? And here's the tough thing about that. It comes down to what is the assessed value, and we don't know exactly what the assessed value is going to be. What I can tell you is on average here, homes get assessed at about 80% of market value most of the time. So if we see a home sold for $1 million, that home from a taxable standpoint is typically going to be assessed somewhere between $800,000 and $950,000. Obviously then the millage rate applies, but we never know for sure exactly where that number is going to come in for the assessed value. It's always safest to take your sale price and apply the millage rate, but just so you know, that's not typically how assessed value works in our area. So a couple ways or a couple tips for you to save money on your taxes. So saving money on taxes is super important. There are two key ways to do that. Number one, seriously, make sure that you apply for all the exemptions that you can get. There's no reason not to apply for Homestead if it's applicable. If you're a senior citizen, if you're disabled, if you're a vet, thank you for your service, by the way, make sure you get those additional discounts on your home. The second thing is sometimes they reassess your property and they assess it at a value that is above really what your property is worth. And you can go in and fight that. If you have questions, please let me know. I'll tell you all about how to get that done. Listen, buying a home in South Florida is not always an inexpensive endeavor, but one that's worth the while and definitely something that you want to do. But if you're trying to figure out how taxes are going to affect your cost of ownership when you're down here, just reach out and I'm happy to tell you what that looks like. We're here to help you in anything that you need, whether you're looking for a fixer-upper and you need a list of contractors for renovations, if you're looking for a brand new property on the ocean that's been completely done, whatever you need, we're here to help. Taxes are no exclusion from that help either. So if we can do anything for you, please reach out. Don't forget to like the video. Thanks for checking it out.